This is how to trade stop runs when the price is overextended. These are our dot alerts. Very simple strategy. We want these lower bars to be showing green if this is a green dot, and we want this bar to be green. You won't see this bar under here, as you know, we don't see anything beyond this point, but if you see the bar on the chart and the majority of these are green, take the trade. How do you take the trade? There's two ways. Fibonacci, swing low, swing high, the pull back into the 50, stop under the dot, and you can see on our indicators where there are key levels, like this one here, that's a previous daily high or low, and this one is a previous daily high or low. Now you can target these levels. This dot, the red dot, can be where you take partial profits and you pull your stop loss up to break even or better. And this second dot up here is where you can exit. Let's just have a look and see what these look like. We'll start from this list here and work our way down. They're few and far between. However, due to the fact that we have a lot of instruments, currency pairs here, we're going to see the dots. The dots will tell you when there's generally a stop run going on. Okay, so we've got a green dot. The bars are green. This guy's green. We can take the trade. Now, we don't want to take the trade on the same candle as the dot. We wait for the next candle. Once the next candle paints, if the dot is still there, we have a potential opportunity. We're buying, given that this is green, and we're looking for where the dot is. We trace down into the 50% to 61.8. You can take this one step further because there's no signal here to get involved. And you'll find the signal will fire on a 5-minute time frame, or a 3-minute if you like. The signal will fire in around here on the lower time frames. Okay, so after the dot, that can be your cue to go long. We're going to be covering this in depth in VIP. This is an introduction. Let's just go through these and see what these dots look like. Green. Majority of these are green. There's a trade. You can take it at the dot on the second candle at the same level of the dot or the pullback. Stop loss will go under the dot. Go for a 2R by default. Target reached. You know, you can pull your stop loss to break even and trail it if you like after that. Let's just see how these dots shape up. Aussie yen. Green. Okay. Confirmation. Green dot. This one got away on you. You may have missed the opportunity, but you can come in on that pullback, and that was a trade. If we go down to the lower time frame, let's just mark up the dot and have a look at this on 5-minute. That's our point of interest, or a 3-minute. When the dot fires, you can come into the lower time frame. See this? So this is your opportunity to get involved here on a 3-minute or a 5-minute. So we know that this is the dot on the 15M. It also fired on the 3, and you're looking for anywhere after the dot where you see a pullback. Get involved, and that would have been a really nice outcome. So we're going to use a combination of the 15-minute plus the 3 and the 5 for an entry. Back out to the 15, Aussie New Zealand. Guys, it's a pretty high win rate. Get involved. Green, green, confirmation. There's your dot. Take it on the next candle or the pullback. This is going to be more effective, or it'll give you a higher probability when you're trading into either the London Open or the New York Open. It's a much better signal when the market has been ranging sideways. For example, this is kind of sideways price action more or less. It's not really trending. We get a red dot. You know, you'd ignore that because it's a green signal under here, but I mean, you know, if you want a counter trend trade, that's an opportunity. It's trading into, see the level here? When you see the dot, we see these red lines with the divergence, bearish divergence. You know, you could take it on that. You know, but we're going against the higher time frame there. Let's just pick random. Okay, Swiss yen. Which one of these would you not want to take, guys? Seriously, look. Yep. Okay, confirmation. On the next candle, we go in at the same, roughly around the same level of the dot, and look at the outcome right there. Okay, stop under the this previous daily low is not a bad idea. Under the dot, actually, that spiked down. Where did it go? All right, yeah, you want to watch out for these spikes every now and again. So we had the dot. See this previous daily low? Look where it spiked to, like to the pip. Markets are run by algos that target stops. In any case, yeah, just look for obvious levels. Now you may or may not have got caught out with that. Just by random up and down, okay, that'll do. New Zealand, look at this, guys, look. Okay, we got confirmation. There's your dot. You can take it on the next candle, or if you miss it, set up the alerts. Start from the top of your list. Go to the trend channel, 3 bars here, add alert, and you're just going to select extended. That's it, once per bar. I'm going to take out all of this noise. I want that to go off in my phone app. That's it, guys. Extended, and that's going to give you both bullish and bearish. Create 15-minute time frame. These are going to be some really nice signals. Again, go extended once per bar, and that's permanent. Right, and create, and work down your list and create the signals. They will fire in the alerts log. Okay, the alerts above, the log under, and you'll see break 1, break 2. They're the other alerts we have, and then you'll see extended. Looking forward to another profitable week next week. Join VIP, gain access to the indicators. And here's the thing, by the way, look at this. VIP gives you daily trade signals, a chat group, currency trading course, we call it Trading 101 Foundations for Success, and our TradingView indicators with the alerts. Snap it up while it's heavily discounted. There's a need for this. I don't need to charge a lot. I want to share what I have, and this is an opportunity for you to change your life. With that, hope you have a great day, safe trading, and we'll see you in the next video.